I'm going to show you how to save a deposit in 12 months or less. These are practical and proven steps to help you achieve home ownership. Step 1, set your goal. Start with the end in mind. What does success look like? Begin by defining your criteria. Note down everything from the number of bedrooms, bathrooms, the type of home. Make your list as detailed as you can. Here's an example of what your criteria might look like. Next, shortlist no more than 3 suburbs you like to buy in. From here, visit this website. From there, search each suburb based on your criteria. It'll uncover the median sale price over the past 12 months. Repeat this process for the other suburbs you've shortlisted. Now, take the highest median suburb sale price and multiply this by 10%. This is how much the bank will want you to put down in way of a deposit. Next, we'll calculate the total government fees you'll need to pay. You can do this by using our website here. Finally, we'll add an additional $5,000 for other costs that will pop up like conveyancing fees. Now you can set your goal and hit that like button if you're going to or have already set a savings goal. Step 2, is your goal realistic? Remember, we're looking to set a goal which is achievable. So the first thing we're going to look at is how much of a home loan you can afford. Do this by visiting our website here, then using the calculator, fill in all your details. Ideally, you'll use an interest rate between 7 and 8%, as is what the banks will use when assessing your application. Based on the information you input, it'll calculate how much your borrowing power is. This figure should be higher than the median sale price for the 3 suburbs you've shortlisted. If it's less, then go back to step 1 and shortlist suburbs which are more affordable. The second thing we're going to look at is how much of an impact this property will have on your current lifestyle. To do this, head on over to our extra repayment calculator here. Now input the loan amount as the total purchase price you're looking to buy. With interest rates ranging vastly over the past 20 years, you want to use an interest rate between 6 and 8% depending on your outlook on the economy. Once you've figured out the repayment amount, compare this to your current savings and rental repayment pattern. If your mortgage repayment is lower than this total cost, then you're in good shape and the price of the property won't impact your lifestyle much. So as an example, say you're currently paying $800 a week in rent and you're saving $200 on top of this. Your total cost would be $1,000 a week. So long as your mortgage repayment is under this, then you're good to go. However, if your mortgage repayment is higher, you'll need to revisit how much you're looking to spend on a home. Review your current expenses and keep in mind that your lifestyle might need to change in order to afford the mortgage. And remember to hit that subscribe button to keep up to date all the latest with property and finance. Step 3, audit your spendings. Get a handle of your finances by auditing the past 6 months of your transactions on all your accounts. There are 2 ways you can do this, either automated or a manual process. An automated budget will help you save time and effort by categorizing all your expenses and giving you a summary of where your money is going. It's a great option for those who are new to budgeting and are looking for an easy way to get started. There are many applications on the market from free to paid, and they'll be able to do this budgeting for you. Otherwise, you can take control of your budgeting by going manual. However, it requires regular time and effort, but it can give you a much deeper understanding of your spending habit and will help you identify areas you can save. I personally use a manual approach and spend about 20 minutes a week importing and categorizing my expenses. By doing this, I've been able to catch out a few direct debits which are charged after I had cancelled the service. Through budgeting manually, I've realized that it's not always the big expenses that hurt my savings. It's the small transactions that add up over time that have a massive impact. Step 4, review all expenditures. Now it's time to examine what expenses can be eliminated, altered, decreased, or maintained. Let's start with direct debit. Is that gym membership still worth it if you haven't been for months? How about downgrading your phone plan? All streaming services should be scrutinized as well. Ask yourself if you really need the service or if there's a free alternative available. Eating and drinking out can be a major budget drainer. Your coffee habit might be costing you over $1,200 a year. Car finance is a common budget buster. If possible, sell your car, pay off the debt, and buy a more affordable option. When it comes down to changing your habits, slow and steady wins a race. It's better to make small changes to your expenses and be consistent each week. if you've been drinking barista-made coffee for the past 10 years, it might be tough to kick the habit all at once, but surely missing one day a week is doable. From there, slowly transition to a new habit over time. This will increase the chances of your long-term success. Step 5, are you able to have a side hustle? Great job on reviewing your spendings and finding ways to cut back. Now it's time to turn our attention to increasing your income. Do you have a side hustle or a way to earn extra cash in your spare time? While a full-time job may be paying the bills, there's still 30 plus hours each week that you can be putting to good use. Whether it's through gig platforms like Airtask or Uber, there are endless opportunities to turn your free time into money-making time. Get creative and start earning more money on the side. Step 6, moving in with mum and dad. Moving back in with your parents might not be your first choice, but it could be a very smart financial move. If you're renting at $700 a week, then moving back at home would mean a $36,000 a year in savings. Remember, this is a short-term solution with a long-term benefit. And if your parents are open to this idea, grab the opportunity with both hands, as it's the easiest way to get ahead and to increase your savings. Step 7, regularly review. Great work moving back in with the parents and saving some serious cash. Now it's time to stay on track and make the most of this opportunity. Try setting aside 30 minutes a week at the same time to review your spendings and repeat steps 3 and 4 each week. This will help you keep your finger on the pulse and ensure that you're staying on course. At the start of each month, take a look at what's coming up. Are there birthdays, special events? Make sure to account for these expenses in your budget and know that it's okay that you're not having a killer savings month every single month. Just make sure you're accounting for it and staying on track. With a little planning and dedication, you'll be on your way to achieving your financial goal. Step 8, don't reward yourself financially for achieving your savings goal. The secret to successful savings is linking pleasure with your savings and pain with your spending. It's not easy, but when you master the skill, you'll achieve the holy grail in personal finances. One thing to avoid on your savings journey is to reward yourself with purchases. While it's important to celebrate the milestones, linking pleasure with spending can lead to problems down the road. Instead of buying yourself a gift, create an experience with a loved one. As a child, we were hardwired to link pleasure with spending, and psychologists have an experiment called Pavlov's dog. It explains the anticipated pleasure we feel from spending. By understanding this phenomenon, we can take control of our own mind and shift our mindset towards a healthier paradigm. This will allow us to choose our own path and escape the cycle of mindless spending. Here at Hunter Galloway, we're mortgage brokers who get home loans approved. We help Australia-wide and don't charge a fee for our service. So reach out and contact us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.